All right, let's get started. I think people are still going to be trickling in for the next couple of minutes, but I don't want to make the rest of you wait. So, with that, thank you all for joining our webinar. This is hopefully the first in a long series of content that BitGo will be producing, not only to share about what we do, but just to get people more familiar with the crypto ecosystem in general and hopefully smooth over some of the friction involved into onboarding into Web3. So my name is Frank. I am on the sales team here at BitGo, and I am joined by Kevin Hackes, who is our head of solutions engineering. And the two of us will be covering the Wallets 101 content today. So what are we going to cover today? We're going to tell you a little bit about BitGo as a required sort of message from our sponsor. We're going to tell you about what we do in the digital asset ecosystem. We're going to talk about what a wallet is from a sort of a very fundamental, basic perspective. And then we're going to get into some details about the way BitGo provides these wallets to the industry and the types of functionality you can expect from engaging with a BitGo wallet, some popular use cases, and then we'll open it up for Q&A at the end. So first, who are we and why are we here today? So BitGo, um, at its very beginning, was a wallet company. Our founder, his name is Mike Belshi, was a veteran of what you might consider Web 1 and Web 2. He was an early engineer at Netscape, early engineer over at Chrome, and he was an early adopter of Bitcoin. And there's an apocryphal story that kind of gets tossed around about. I think Mike was storing his Bitcoin in a laptop under his couch at one point in time. Don't know if that's true, but his first product that later here became the foundation of BitGo was a Bitcoin wallet. He needed a better way to secure the Bitcoin that he had acquired, and he realized that all of his other early adopter friends in Silicon Valley also needed a better solution than what was available. So Mike built and pioneered the use of a multi-sig technology to secure his Bitcoin. And we'll talk a little bit about what multi-sig is. But the takeaway here is BitGo started in 2013 as a wallet company. Since then, we've continued to stack our capabilities on top of that fundamental offering, that software offering as a wallet. We've added some regulated entities into our corporate structure. We'll talk a little bit more about that later. We've also offering additional services like trading and liquidity, financing, staking, and have continued to add more regulated entities as well as things like insurance on the assets that BitGo will secure for our clients. Briefly, we are probably the largest independent custodian in the world in terms of crypto assets, outside of a custodian that might be attached to, say, a crypto exchange. Um, we are the only sort of standalone crypto custodian of this size. We serve something like 1,500 or so institutional clients, um, 900, maybe even more coins and tokens that we support. 20% of all on-chain Bitcoin actually passes through a BitGo wallet. Um, we've done the work to get our SOC 1 Type 2 and SOC 2 Type 2 certifications. And I think it's at least 3 trillion in lifetime volume that we have processed through our wallets. I briefly mentioned BitGo is a regulated entity now. This is now a large part of who we are, in that we are a regulated financial institution in multiple geographies around the world. What this means is this gives BitGo the ability to protect client assets under a regulated entity, meaning an entity that has oversight from either a state or federal authority to make sure that we are doing what we say we are doing, that we have the right security policies in place, that we have the right books and records, that we are complying with anti-money laundering and Bank Secrecy Act regulations. This means that if you give your assets to BitGo to secure, there is a great deal of oversight in terms of how we operate. So enough about BitGo. The reason you guys are here today is to learn about wallets. So we're going to talk a little bit about wallets, and I'm going to kind of start from the very beginning for those of you who may not be familiar with wallets or crypto in general. I'm going to assume that we have a wide breadth of expertise participating on the call. Some of you may be crypto native and are building your own crypto app. Some of you may have never heard of this at all. So forgive me if you've heard some of this. Okay, so what is a wallet? A wallet, in the simplest terms, is a piece of software that helps you interact with the blockchain. The wallet is a piece of software, and this is the kind of software that Mike Belshie built back in 2013 that enables someone to interact with the blockchain. In the case of Mike in 2013, that was Bitcoin. So, using Bitcoin as sort of an example, uh, BitGo provides a software solution that allows someone to interact with the Bitcoin blockchain. Taking that one level deeper, what a wallet also is it is a piece of software that manages a couple of things that we call key. Now, a wallet is actually a piece of software then that helps you manage a pair of keys. And there's something called a private key. And a private key at its core is just a really long string of numbers. It's a really long number that's randomly generated. And then that randomly generated number is used to derive something called the public key. And that public key is then used to derive something called an address. So now we have this thing that's a private key. It's this really long generate privately, a really long randomly generated number. You have a public key, which was generated from the private key through a mathematical function called elliptic curve cryptography. Um, and then now you have this public key, and that public key is actually then shortened. For those of you who are curious, generally through something called a hash function and some other related processes to result in something called an address. So this address is similar to like your account number. It is publicly available. The world can see it, and anybody can deposit Bitcoin, crypto funds to that address. So we have, again, your private key and a public address. That public address is available to the world to see and for anyone to deposit into. But here's the key, pun intended. Your private key is what allows you to move your Bitcoin or your assets from that publicly available address. So anyone can deposit, but the only people who can move assets out of that address, out of that account number, is someone with access to the private key. So that means this private key is extremely important to keep secure because as soon as someone has access to it, they have access to your crypto, to your Bitcoin. You've likely heard the phrase "not your keys, not your crypto." The root of that popular phrase is in the fact that your crypto is only as secure as your private key. So you might say, okay, well, great. I keep my password secure. I'm perfectly capable of keeping a private key secure. How big of a deal is it that you need companies like BitGo or wallet companies to help secure private keys? And the unfortunate reality is that hacks happen all the time. Um, Here is sort of a graveyard of relatively well-known crypto companies, and there's probably four more pages of this that we could populate of crypto exchanges or other companies that have been hacked. Most recently, was your X was the largest crypto exchange. I guess still is the largest crypto exchange in India. They were hacked to the tune of $234 million. And so these types of hacks are still happening today. And so if you have crypto that's sitting, it's protected by that private key, it is hugely important for you to keep that private key secure. Um, one thing one thing to think about, one way of thinking about the difference between, let's say, a, a crypto asset and let's say an account balance at a bank, it's that your crypto asset is similar to a bearer instrument. If some of you might be familiar with the concept of bearer bonds, or cash, for example. If the cash is in your hand, the cash is yours. If someone has your key, then the crypto associated with that key is in their control. And if you lose that key, or if someone moves your crypto from an address you control to one that you do not control, it's gone. There's no way to recover it unless someone has a change of heart, the hacker decides to give it back. So it is incredibly important to secure that key. So that was sort of an overview of who we are, what a crypto wallet is, and call it 3 minutes. And I'm going to hand it over to Kevin, who will dive a little deeper into the types of wallets that we offer, and sort of the full suite of products we provide to the industry. So Kevin, off to you.
Thank you, Frank. So as Frank has mentioned, that rudimentary or sort of understanding of a wallet and having the fear of not being able to access your funds because of a loss or theft of a single key. BitGo solves that problem by offering our customers with multiple types of wallets and a very robust key scheme that really secures and diversifies the methods and the ways in which our customers can secure their digital assets, their Bitcoin, or other digital assets that we do support. And starting with the wallet types, we do offer different wallet types that our customers can build upon and create a very robust architecture, starting with our regulated custody offering, in which BitGo manages the keys for our customers. So we take on a lot of the responsibility of making sure that your assets are secured and your assets are available to you at any given moment that you would like. And for customers that would like to take different routes or have other needs, we also offer self-custody wallets that allow them to work with those digital assets pretty quickly and in different ways. And all of that underpinned by a multi-signature scheme in which we eliminate that single point of failure of having a loss or a theft of a single key. And we'll get into a little bit of the details of how that happens. But at BitGo, we do support multi-signature wallets at a protocol level. We do take advantage of the functionalities that are available to us through the public blockchains wherever possible. And we also have wallets that take advantage of a new type of key scheme called multi-party computation, in which you can divide a single key into multiple shards and have a threshold set in place through cryptographic and other sorts of algorithms, so that you have a way of signing a transaction without exposing the private key fully in a single place, and also have the ability to create recoverability to account for any of those unforeseen events. And all of that to say, all of that is also available to customers to configure them in different ways. We have ways in which customers can actually configure their multiple keys in an online fashion, enabling them to access their funds very quickly and process withdrawals nearly instantaneously. We also have methods of safeguarding those keys in an offline form, making sure that the keys have never seen the internet and really mitigating risks of any sort of hacks. And for other customers that have tools available to them within their infrastructure, we also have on-prem solutions that allow our customers to integrate with our platform and really customize the way in which they safeguard and use their wallet keys, and in conjunction with the BitGo platform. And so why would you use all of these different types of wallets in the first place? Well, every type of wallet has its benefit and its drawbacks. And so some of the types of the use cases that we do support, if you will, Frank, please, to the next slide, really have to do with what is it that you would like to do with your assets. As I mentioned before, we do have self-custody wallets in which you can manage the keys in an online fashion. And a lot of customers really take advantage of that to be able to transfer those funds quickly, send funds with ease. And so maybe you have some sort of an application that you're or service that you're giving to your customers in which maybe you want to process different payments on an instant basis using crypto. Your self-custody wallets would be a good fit for that use case. For other customers that may have treasury or may have a use case in which they want to safeguard their funds for longer term, our custody wallets are optimized to keep those funds secure. We do manage our custody wallets using deep cold storage, so that management on the right-hand side from the previous slide is what we use as the gold standard to keep our customers' assets safe. Our customers can enjoy that security that their assets will be free of any sort of unforeseen events. We also offer up $250 million of insurance coverage on those assets. So for customers that are looking to hold long-term or even hold their assets long-term and enjoy other types of, let's say, products such as staking and want to create a little bit more of, let's say, return for the assets they're holding in long-term storage, our custody wallets are really, really aligned to serve those use cases. And as I mentioned before, for customers that do have really, bespoke requirements or have tools available to them and would like to, let's say, integrate with the BitGo platform using those key management tools or an HSM or other, sorts of systems, our on-prem wallets are fit for purpose. You can meet your own regulatory requirements if you do have them. There are certain jurisdictions that require keys be held on soil. So these on-prem wallets will really fit some sort of a use case that's fit for that purpose. And really, take advantage of the infrastructure that BitGo provides with a little bit of flavor, with a little bit of your own sort of tooling and your own controls over the keys that are underpinned by the wallets. So going into a little bit of detail and diving into what is a BitGo wallet, we do have different types of wallets. We do have different ways of managing those keys. Fundamentally, all of those wallet types and all of the ways that we manage these keys come or are part of what we see here as part of that anatomy of a BitGo wallet. So all of our wallets are underpinned by a 2 of 3 multi-signature key scheme in which there are 3 different keys, public-private key pairs in the case of multi-signature wallets, or in the case of multi-party computation wallets, MPC wallets, we have technology in place in order to divide that key into 3 pieces. And the reason that this is extremely powerful is because it allows our customers to create different and diverse ways of managing their keys for a single wallet. You can decide to hold a client key on an online basis or through an on-prem integration and have that key available programmatically while maintaining a backup key in a cold storage medium. So you have the ability of not only diversifying your risk in terms of technology, you have the ability to also create really customized ways of building in disaster recovery in case of any unforeseen events. And be able to, really define in your own terms how you would like to do or how you would like to manage those keys. So the 2 of 3 multi-signature scheme underpinning all of the wallets really is the powerful part of a BitGo wallet. And on top of that, we layer in different types of functionalities. In the classic example of a wallet, you have one key pair that derives into or is used to derive one address. Our wallets allow our customers to actually generate different receive addresses or different account numbers, as you will, on chain, all underpinned by the same sets of keys. Not only that, we also have powerful tools, which we'll get into in terms of building in operational procedures such as policies, applying different policies to your transactions before they're actually published on chain, as well as creating different visibility and user roles in order to limit the access to those funds, as well as different tools like webhooks to be notified. But when we talk about a BitGo wallet, this is really the under the hood, or sort of the protocol or the paradigm that we do work with, and it's replicated across our stack. So going into a little bit of how you can use these wallets, or how you can also not only hold the keys in a secure manner, but we also have different types of functionalities like wallet policies that will also give our customers the ability to be able to really build in operational procedures and controls around them, if you will. Frank, the next slide. And these wallet policies include things like whitelisting, so knowing where you're sending your funds. It's really important to understand where you're sending your funds so that you have control over unauthorized withdrawals. So within our system, we allow our customers to configure different lists of valid addresses that are known to them, and protect against any sort of unauthorized withdrawal to addresses that are not known to that organization. Within our wallet policy engine, we also allow our customers to configure different types of transaction limits. So single transaction limits to for any sort of value of the digital asset that you're holding. Maybe you want to mitigate someone sending the entire balance of the wallet in one transaction. Your transaction limits can actually define what those limits are and really make them conducive to the type of business that you are running. And we also couple that with velocity limits. It's sort of taking the transaction limits to a step further, where you can define how much of an asset, or how much of the Bitcoin, for example, can actually leave a wallet for a determined period of time. So if you do have a business that normally runs withdrawals within a range of, let's say, 2 Bitcoin a day, you can actually capture and create different processes and controls so that if there is a day in which more than that number is being withdrawn from the wallet policies, you have a chance to intervene and take action if needed. Wallet policies, are coupled with approvals, and in order for our customers to actually review and then determine what are the next steps, our policy engine provides the ability for our customers to define how many people within their organization should approve. So coupled with our policies are the organizational roles that you can actually configure within the wallets. We have an organizational role called an administrator, which is effectively the type of role for those folks that need to approve. So you can actually create a separation between the people that are responsible for investigating any of the transactions that have hit any of the limits that were configured from any of the users or any of the users that are actually processing these withdrawals. And you can do that by assigning them for the administrator case as an approver, and for those folks that are actually creating the transactions, they would be spenders. And so you can actually create a good separation of duties within your own organization and create different roles, and also define a threshold of how many of these administrators can actually approve. So that's why we do have layered on top of those wallet policies, multiple approver configurations. We can also take it a step further in terms of creating a second line of approvers. So if the multiple approvers have vetted a transaction, you can actually create a secondary or second line approval from an administrator that will be noted as a final approver. So all of this is really powerful for our customers in order to define their controls. And these are controls that can be specified really on a wallet basis. So maybe for your hot wallet, you don't need that level of control. Maybe you want to be able to have a larger velocity limit and maybe two approvers to go into that wallet. And maybe for a custody wallet, you would want to have more approvers. You have the ability to really define that on a wallet per wallet basis and on a case by case basis, depending on your workflows. So putting it all together, our platform is really amenable to creating different types of architectures or workflows that our customers really can define for themselves. And something like what we're picturing here is a really powerful testament to sort of how our customers can actually overlay all of these different types of wallets to create that vision of creating segregation of duties and really having full control over how they manage their assets in the ecosystem. You can have different types of real-time wallets or self-managed custody wallets that are online to process a lot of those different deposits and withdrawals. You can use those or leverage those wallets to create different receive addresses within the blockchain in order to either assign different addresses to your customers without having to reinvent the wheel or recreate different types of wallets or managing multiple or thousands of keys. You can also leverage them to also increase privacy concerns or obfuscate a little bit of the activity, and use those real-time wallets and those self-custody wallets paired with a BitGo custody wallet for your long-term savings or for your long-term holdings. So if you do have a use case in which you are processing a lot of withdrawals, but you also have an element of treasury, or you have funds that are going to be with you for a very long time, you can actually keep those funds segregated and secure using our custody wallets. And we also have ways of using our wallets in order to access liquidity. So leveraging BitGo's deep cold storage, we also offer the ability for our customers to not only hold their assets within regulated custody with insurance, but also access liquidity from those funds in a cold storage wallet with various liquidity providers. So all of our customers can really use these tools, mix and match, create their vision within the BitGo platform, and enjoy a lot of those benefits within with just using one provider and the most secure wallet out in the market today. So just to sort of summarize, our wallets, BitGo wallets can be used to store your assets in the long term. Our custody wallets being deep cold storage mitigate a lot of the risk of any hacks or thefts, as well as insured qualified custody. You can rest assured that your assets are safe for the long term. Leveraging those cold storage wallets, you can access liquidity, settle with other participants that are also, or settle with other customers that are BitGo customers within our Go network. And then you can also use our self-custody wallets to really transact in real time with the blockchain. And a lot of there are more use cases here that we can explore, and we're happy to work with everyone to understand a little bit more about what you aspire to do within the digital asset world, and we're here to help make that a reality. So with that, I think we're going to open up the webinar to our Q&A session. So I know that there may be a few, or I see that there are a few questions here that we can start to address. I don't know, Frank, would you like to kick off with sort of your first questions that you would like to from the audience?
Yeah, I see Zohar asked about custodian services. To rehash of what some of what Kevin covered is, when BitGo is the custodian, it simply means that we are holding all of the keys on someone else's behalf. It means you or the client is entrusting BitGo, in this case, entrusting BitGo as a regulated financial institution to secure those keys. There are a number of things that we do to ensure the physical security of those keys, as well as protect the assets related to those keys in the event of, say, a bankruptcy. So assets held at BitGo are bankruptcy remote. They are also protected, as Kevin mentioned, by a $250 million insurance policy that kicks in the event of something like a hack that results in the loss of assets. So when crypto companies, let's say exchanges, engage with BitGo, it is usually under the context of, hey, I am the exchange and I have several $100 million of client assets. I would like to put my client assets into a trust. So in our case, BitGo South Dakota Trust Company, to basically give those assets a home that is more secure than the exchange can offer themselves. Because should that exchange go down, let's say, famously in the case of FTX, let's say that exchange were to go bankrupt. If those assets, those client assets, are held at a trust that, like such as BitGo, the client's assets would remain the client's assets. If they were not held at the trust, and you as a client of exchange would be at the back of the line as an unsecured creditor in the bankruptcy proceedings, and you'd have quite a fight to get your assets back. So there's a benefit in terms of, let's say, retail facing crypto companies to place their client assets with a custodian such as BitGo. And if you're a regulated investment advisor or other type of regulated financial institution, in some cases, you are required to place assets with a custodian. There's a lot more we can probably cover there, but I did want to make sure we had time for other questions. Ben asked, do we offer singular keys as a backup for multi-sig? As Kevin mentioned, multi-sig, let's say an example of Bitcoin, there are always three keys, right? And we run a 203 sort of threshold signing scheme for assets to move. That means if there are three keys in existence, two of those keys must be used in order for assets to move. Those three keys can either be, again, held entirely at BitGo under BitGo's protection in cold storage, or the client can be given two of those keys. And that in that scenario, we would consider those assets to be self-custodial, meaning the client would have custody of those keys. So there's a couple of ways to do this. I see Zohar asked about borrowing and lending services. BitGo has a capability to lend fiat against, let's say, Bitcoin or ETH collateral. You're going to see LTVs anywhere from 40 to 60, maybe even higher, so-called 40 to 60%. That collateral would be held at BitGo in custody at the trust. And there are conditions for margin calls and liquidations. Generally, if you fall below, let's say, a certain LTV, we might give you a call and ask you to top it off, or we might liquidate. And that's going to be very dependent on the conditions of that loan. APRs or rates, you're looking, what the market is out there right now, you're probably seeing 12, 13, 14% to borrow fiat against Bitcoin. Again, that changes quite frequently. As you all know, we're in an interest rate environment that is going to be subject to change, and also depends on the risk profile of the borrower. BitGo can also act in a tri-party capacity, in which there is a borrower, there is a lender who's going to be the secured party, and BitGo acts as essentially the holder of the collateral. So the lender and borrower agree that the borrower will post collateral at BitGo in trust, and the lender will be secured by the collateral that sits here in the trust. Nick, can you explain who controls each key, assuming BitGo controls two? Or these keys physically separated in vaults? Kevin, you want to take this one?
Yeah, so for our custody wallets, as Frank has mentioned, BitGo manages all three keys on behalf of our customers. And there are certain safeguards and procedures in place in order to manage those keys effectively to eliminate single points of failure, as well as managing sort of risks in terms of collusion. So that is to say that the keys themselves are held in an offline fashion. They are all geographically separated. never in the same geographical location in any given moment. As well as, we've had implemented different types of procedures and controls in place to ensure that there isn't a single key man risk failure. So there is a team of folks that are undisclosed, that perform a signing ceremony every time that there is a transaction to be processed. And so, we take that security to the utmost importance, and we ensure that those keys that are safeguarded by BitGo Trust are free of those types of risks.
All right, next on the list is Nick. How would BitGo respond to a government requesting assets to be confiscated? To be honest, this is probably a little bit outside our wheelhouse. If you're talking, in context of, let's say, the U.S. government as a U.S. regulated entity, I am aware that the U.S. government has certain rights under the Patriot Act. The government has determined that certain assets are related to terrorism. I think the government actually has quite pretty broad powers to seize assets. I think civil forfeiture is another example. Again, these, I think, situations are rare, and I'm actually not aware that these have happened with BitGo, but I will actually punt this since this is a little bit outside of our wheelhouse. If you do wish to find more information about what happens in these situations, we're happy to put you in touch with someone from our legal and compliance team offline. Does BitGo have any plans to allow users to generate yield on BTC through restaking via Babylon? It's a great question. We are actually actively evaluating this right now. We're in talks with a number of related parties about allowing our clients or enabling our clients to put their BTC to use. Some of it's through things like restaking via Babylon. Some things might look more like you can sell covered calls against an underlying Bitcoin position and clip a little bit in terms of a return. So these are all things that are in the works. None of them are live today. Johar is asking, isn't 250 million much less than your total AUC? That is a great point. The way that insurance policy works is that it kicks in on a per incident basis. Now, because BitGo keys are segregated, and there's a couple of the security things that we have underneath the hood that make it highly unlikely that more than a single key will ever be compromised at one time, we require our clients to keep less than $250 million in a single wallet, so in a single public-private key pair. In fact, I think we start nudging clients to start rebalancing once a single wallet balance hits something like 150 million. And so if you have $1 billion with this, that means, okay, you're going to have 5 or 6 wallets to spread out that $1 billion worth of ETH or Bitcoin or whatever it is. And so, yes, while $250 million is much less than our total AUC or assets under custody, there are ways to mitigate that. And frankly, I'm not aware of any custodian that has one-to-one asset coverage or insurance coverage to assets. I think there was one in Canada, and it's extremely or prohibitively expensive, both to purchase as well as to use their service. Sandeep is asking, does BitGo only support institutions with a minimum AUM of 5 million? What is the minimum AUM required to qualify for a BitGo wallet? There are a couple of different ways now for both individuals and institutions to interact with BitGo. Generally speaking, we do have like a starter plan for institutions, and that depending on your use case, you're probably going to want something at least a few $1 million in order for the economics to be worth it for you to use us. You can also sign up for what we call a pay-as-you-go or pay-go or starter plan. You can do this on your own, and in that case, you pay nothing. You will have access to BitGo hot wallets, and you can use those hot wallets to conduct your transactions and interact with the blockchain. You will not onboard to the trust or have the benefits of a trust account, but the barrier to entry for a starter or pay-as-you-go package is zero, right? You only pay for what you use. Ben is asking, are we open source? Kevin, you want to talk a little bit about our open source philosophy?
Yes, so I did respond in the chat there. We do have all tools or integration tools are open source, so that gives our customers the ability to manage their keys or manage the integration with the BitGo platform, as well as build any other tools that they would like in terms of recoverability of their self-managed wallets with that open source repository. So I've already included a link in the chat, and hopefully that will help out. And if there are any other questions, please feel free to reach out.
Right.
And
Nahar's asking about terms of a loan. Loans are generally, they're term loans. They're mostly open term with something like I think a 30-day notice for us to call that loan. I can get you more specifics if you are interested in discussing a loan with us.
Ben is asking as well, as an exchange wrapper, are there any minimum volumes? If you are the custodian, where can I see more information on this and pricing?
Ben, I'll contact you offline and we can discuss your use case and what that might cost. It's kind of difficult for us to provide like a one size fits all like price sheet. You'd be very surprised at the wide range of use cases that come our way. And so putting a fixed sort of price sheet out there is a double-edged sword, I think. Sometimes clients love that transparency, and generally like, you'll get in the call with us and we'll be pretty transparent. But if we put something on the web, sometimes a client might say, well, that doesn't fit my business model, so I don't want to talk to these guys. When reality is we're very much willing to adjust our billing and pricing framework kind of on a per client basis. Some clients might need to optimize for high volume transactions, right? They're maybe in the payment space or they do a lot of flow and they don't custody anything, but they do want the protection of a trust. Other clients are like, look, we're buy and hold. We're holders. We just want to keep assets there. We're never going to move stuff. And so pricing for them is going to look very different than, say, a transaction or volume based client. Any other questions? Dropping my email there in the chat. You can always email sales@bitgo.com if you have additional questions. Even if it's not necessarily a sales inquiry, you can email us and we'll find someone to try and answer your questions. All right. I think that's it for the day. Thank you all very much for joining this webinar. We hope you got something out of it. And again, if you have questions, feel free to ping us afterwards. Cheers.
Great. Thank you very much. Bye-bye.